Trump, in a bid to make America great again, is trying to have good relations with Africa.
Is he really trying?
Yeah, he is. Okay. If he considers removing trade restrictions,
Trump.
Yeah, not just AGOA, the whole of Africa.
If he considers.
Yeah, if he considers that, then that means that.
Hello guys, welcome to yet another episode of Bullish Banter. I hope you enjoyed the last one with Stormzy, where we covered investments, and of course, you might have picked one or two. Do not forget to, send in your questions should you have something that you might want him or us to address in the future episodes. Today on the Juneteenth, how are you doing, Rufus?
I'm doing well. I'm really great.
Yes.
Yeah, I just had a bad flu, but hopefully my voice has recovered.
Well, yeah. Interesting. It's a bit. I would say hot and dusty.
Yeah.
For those who are in Nairobi, for those who are wherever you are, I hope your weather is as pleasant, and you are doing all right. Today we are covering three major aspects of what is happening in the markets. Some are already developing. Some I think has been anticipated and we are over with. So we'll begin with the banking sector. I think the last 2 weeks and even this week, we are still getting some banking decisions.
Yeah.
And yesterday, of course, June 18th, FOMC decided to maintain. And I think we were debating earlier, what is the sentiment like? Are they looking to cut?
Yeah.
Is there any signals of a cut?
Yeah.
Or a maintenance.
Yeah.
And Trump was I think before the FOMC announcement, Trump was I know he will not cut. He's not a very wise man.
Yeah.
And I'm
it's more like stupid Powell, but
yeah. And I mean, I think Trump is trying to control everything.
Yeah, he's a bully.
And not even a bully. He's trying to micromanage literally every aspect of the economy, so that the result speaks of his actions.
Yeah.
But the hard data are not convincing professionals, especially in the FOMC, perhaps, to align with these political sentiments. What do you make?
There's quite a number of things to consider. On one side, we saw inflation dropping to 2.3 before jumping to 2.4%.
Yes.
I would say that's a big positive.
Yeah.
He has declared a win despite Powell doing all the work.
Yes.
Saying, you see, we have brought inflation back to 2.4%.
Yeah, he ran on eggs.
Yeah.
And the egg, we don't live there, but a dozen is still expensive based on, the social commentaries.
Yeah. Then there was this other time he said it's now time to buy stocks before he froze the tariffs by 90 days.
Yeah.
Stocks rallied. Markets really recovered well. So he also took away in that. Then there is this other case of interest rates. So interest rates are still significantly high, and this is impacting mortgages, private lending, and every other aspect of borrowing in the US economy is being impacted by high interest rates. So he has been really pressuring the Fed to cut interest rates, despite Fed having a job and a mandate. And of course, they're observing the data. They're not listening to Trump.
Okay.
And then on the economy side, as per the performance, I would say the US economy contracted by 0.3% in Q1. So that was a big, big hit. And now that there's still a lot of complexities in terms of trade, import-export business due to tariffs. So we could be seeing yet another contraction in Q2. So that's still a big thing that he hasn't handled.
Okay.
Then I believe there is one more. What is it?
NFP numbers?
Yeah. NFP numbers are really missing it.
Yeah.
But I believe they have brought up the Joe Biden policy, where they would announce a big number and then the following month revise it downwards.
Okay.
Retail sales took a big hit. So we are basically looking at potentially empty shelves in the US.
I think there was something interesting he mentioned that the hotel businesses and the service industry were suffering due to mass immigration.
Yeah.
And therefore he was looking at pausing immigration within certain sectors because they would not have hotel servers. Unfortunately, those are the ones where immigrants form a lot of, the jobs market. And ideally, you will find that the locals would not ordinarily want to do those jobs. Or they would be willing, but at a price the facility owners would not be willing to pay.
I remember 2 weeks ago,
they
implemented the biggest ICE crackdown on immigrants in New York City.
Yes.
These guys are just waking up and realizing that the guy who handles your shoes across the road is an immigrant without papers. The taxi cab you use to go to work is an immigrant without papers. Like the handyman who fixes your stuff at home is an immigrant without papers. And now after cracking down on these guys, now you can't find them. There's scarcity, and then those prices go up.
Yes.
So people are realizing, wait a minute, these immigrants who are doing a lot of good work here.
And I think that is why, adding on to what is happening, I think the Fed is also concerned that dollar was losing strength at a faster pace that would trigger inflation within the economy. And therefore, holding it and signaling hawkish signals as opposed to dovish has allowed the dollar to be weak. Maybe it can be positive to some, not so much to the others, but it allows the economy not to collapse in total. That there's some independence in some institutions.
Well, from four Fed members in March who are looking to hold rates at the current level, now that jumping to 8 members, I think that's a big shift.
I think we are in the process of central bank divergence. I think we started this a while back. They had converged, all of them were cutting, but I think right now divergence is appearing, whereby European banks are dovish. America and Japan are hawkish, at least for the near future. Despite everything happening, they are not, these two economies or sides are not like on the same page.
But when you say European, there is quite a difference. If you look at the Eurozone, we are looking at around, what is it, 2.1%?
Yes.
Then you look at Switzerland, they cut rates today to 0%. And they are looking to hold that for the next 2 years. On the other hand, if you compare with the UK, they just held rates at 4.25%.
But they cut in the last meeting as well. So they have been doing it a cut, pause, cut, pause. So, but they still agree that there will be cuts in between. I think it's just the pace and the number of cuts that they are yet to. I would say they are not agreeing, but the direction is still the same.
Well, I would say there's a lot of wild cards. So on one side, when these banks were cutting rates, nobody was anticipating a huge war between Israel and Iran. So
anticipating is a bit off. It has been going on for what?
I'd say the last 5 days.
Not even 2 years. That's almost 100 years, let's say.
Well, for the last 30 years, it was more like JoJo, like these guys are talking, these guys are talking. The last 5 days, it's bombs, like missiles. Like with this kind of environment, it creates uncertainty. And even for a central banker, before they make a decision on policy, they have to consider the wider implications of that. So it's not just the war between Israel and Iran. We're also looking at potential where we know that there is usually a very strong correlation between oil prices and inflation. So when oil prices are really low, you're able to control inflation. If they go up, they also drive the prices of consumer goods higher. So we had seen some good progress, especially since last month. In May, we saw oil prices hitting $59, $58 per barrel. But then in a span of 2 weeks, we have seen $72, $73 per barrel on Brent oil. So that big shift in Brent oil prices, if left high for too long, maybe for the next quarter, it would begin impacting consumer prices and then drive inflation higher.
I think before we go even into the oil market dynamics, I think this is what, just tying that into what is happening geopolitically either way, same thing happening in the price of gold, whereby everyone knows that these tensions are likely to get worse over time. They are not cooling down, and unfortunately, global leadership right now and rationalism is not. They are not on the same page.
They are on the same page.
They are not on the same. Like, if I think earlier we were speaking about when the tariff talks were hitting highs, you would hear Germany would spend at least the biggest percentage, almost 2% of their budget in military and building the entire infrastructure. UK committed the same. France has committed the same. European Central Bank is ready to finance however necessary. Canada is doing the same. So all members of NATO are basically building their military war chest and financial war chest for that. That is one side of it. So that means they are not looking for peace per se. They are looking for perceived peace, meaning if we can dominate you military-wise, then at least we will have some peace, right? And that will mean what? More financing. That will mean more employment,
higher taxes.
higher taxes, of course,
Yeah.
and perhaps maybe
Even higher bond yields.
exactly.
Yeah.
So they are and probably that is what they are aiming for. So I think some of the banks, especially in areas whereby you'd say their inflation numbers were not promising, if you go by the textbook central bank decision,
Yeah.
they were not influencing a cut.
Yeah.
Right now, they are not even waiting for that 2%.
Yeah.
Okay, we are almost there.
Yeah.
We will do it.
Yeah.
But Powell is like, no, I'll wait
Yeah.
until I get what I want to see,
Yeah.
and then be done in it. So be it. Even if after the meeting with Trump, you thought maybe they would come into the same book, but after he left,
Yeah.
Trump was already tracking him. So
Yeah.
what I'm trying to say is like, I think European European central bankers are taking advantage of cash coming into Europe,
Yeah.
so demand for their currency,
Yeah.
inflation might go down because people are like, okay, we cannot trade with the US, maybe we can pack it here as we think about it.
Yeah.
And CHF is
Yeah.
becoming a safe haven again after a long time being
Yeah.
non-safe haven.
Yeah.
Uh-huh.
So from what I'm seeing, if you are to look at this 10 years ago, let's say 10 years ago, a conflict started between Iran and Israel, and there was all these missiles flowing to
Yeah.
and fro.
Uh-huh.
So naturally, you would see NATO having a singular voice.
Yeah.
So you would see NATO basically saying that please stop this war. This is the Court of International or whatever. Follow these laws. Stop these immediately. We are implementing sanctions on you as NATO or as the West, so which would include, let's say, the EU nations. Maybe there will be UK.
Travel
US.
restrictions to citizens of these places,
Yes.
even their supporters thereof.
So today we are having this scenario where there's a conflict between Iran and Israel, but the guys who are supposed to speak in one voice include Trump, who is threatening 50% tariffs on the EU.
Yeah.
He has implemented 25% tariffs on Canada,
Yeah.
plus 10% on Canada for fentanyl, 25% tariffs on the rest of the world for steel, aluminium,
And just 10% because I can.
yeah, like how do you negotiate or agree with this guy
Yeah.
to have a uniform voice
Yeah.
to try and calm the situation in the Middle East?
Okay.
So right now it's very difficult for them to agree. That's why we are seeing nations making decisions individually.
Okay.
So the president of France will say this is our take. Germany will say this is our take in this, and many other countries the same way.
Okay.
So I think with this kind of progress that we are seeing in global dynamics, especially geopolitics, it's only making it easier to observe that there are two factions in the world. But I would say multiple world. On one side, you can see China directly supporting Iran because they are getting a majority of their oil imports from Iran. Yeah.
Okay, interesting. I wanted to just, before we proceed, we can just even go.
Yeah.
You noticed on Monday, despite the weekend activities,
Yeah.
ideally, normally, whenever there is escalating tensions,
Yeah.
safe haven assets would benefit directly.
Yeah.
But the opposite is happening.
Yeah.
I think the same thing is on oil prices. I don't think the oil price will even hit 120
Yeah.
unless,
Yeah.
which is something I think over the last, I was seeing some data, over the last almost 30 years,
Yeah.
there has been threats to close the Strait of Hormuz.
Yeah.
And none out of those 15 times they have threatened,
Yeah.
they have actually never closed it.
Yeah. They have never closed it.
Yeah, so I don't expect them to close it in such a way that it would cause the price of oil to go up.
Yeah.
Why? Last week we said what?
Yeah.
The other time.
Yeah.
They have already, OPEC have already decided to increase, and they are meeting and planning to increase production.
Yes.
So that means supply is there.
Yeah.
US has their reserves in plenty. China is buying oil in plenty, but they are not producing a lot.
Yeah.
So a lot of reserves are actually quite at capacity.
Yeah.
That means that they can supply the economy without causing the price of inflation. So inflation might not really, at least for the better part of the world,
Yeah.
might not be a concern due to energy prices,
Yeah.
but due to goods being
Yeah.
not in enough supply
Yeah.
to match the demand. Given tariffs are there, it's expensive to transport and everything.
Yeah.
Now, with that in mind,
Yeah.
I think this spike is just temporary. The same
Yeah.
thing with a correction in gold. It's just
Yeah.
a temporary drop in price, which it's normal in this
Yeah.
sports market.
Yeah.
But over time,
Yeah.
once the thing settled down in that, the real impact of tariffs hits,
Yeah.
and the real impact of the war, because I think, as we have seen today, unfortunately, a hospital was blown in Israel,
Yeah.
and I'm sure that will cause a lot of emotional reaction and unfortunate reaction at that.
Yeah.
And then that is when we can say, okay, if you cannot travel in the Middle East, that means even production capacity of Iran, a major player in the OPEC, will be an issue. And that if that is affected, then I think either the US will increase or issue licenses to shell production, which they were basically closed just to match the demand. And that, I think, in that period of waiting and seeing, then we can see maybe a bit of spike.
Well, for oil, the way I see it, the Strait of Hormuz is what? Is running about 20% of global supply.
Yes.
Yeah, in that small path, like global ships for both gas and oil, 20% passes through that area. So what we are seeing right now is not a closure. Like travel hasn't been crossed through that path.
Delays.
But then the risk of pushing your tankers through that area is significantly high. So these ships that are going through the Strait of Hormuz, they must be insured. So as an insurer, when you realize that there is an increased risk in that area, what do?
Increase the premiums.
Yeah, you hike the premiums.
Yeah.
So what we are seeing as an increase in oil prices to $72, $73 per barrel is basically an increase in the premiums for basically facilitating that kind of travel.
Okay.
So an entire closure would be a major escalation. Like for Iran to hit the US, where it hurts the most, it wouldn't have to shoot missiles all the way to the US. So all it has to do is to close the canal. Once they close, that would impact the US economy more. So for them, they are threatening. They are basically telling the US, if you get involved in this, we'll close the Strait of Hormuz.
I am not very confrontational. Or rather, I prefer non-confrontational, and I always wonder, why would they even do this, Because it serves no particular purpose.
Yeah. But they are being hit every day. We are just looking at one side.
Yeah.
But Israel is hitting their oil infrastructure. It's also hitting their uranium mines.
Definitely.
Yeah.
I mean, the damages to both sides are there.
Yeah.
But I would say
Iran is taking the bigger hit.
Yeah.
Despite all that is happening in the news, Iran is taking the bigger hit. And if their entire oil production is
crippled.
Yeah. If it's no longer functional, then Iran economy would be hit the worst.
Okay.
China would also be hit.
Definitely.
So in order to try and calm the situation, so they are basically defending by attacking. That's what they are doing.
Yeah. I'm trying to say, hopefully they find a way to just, not forgive and forget, but live harmoniously, not talking to each other.
Well,
we will not fight, but you just stay in your lane, I'll stay in my lane, we'll not kill each other's family. I hope they come to such an agreement.
So in such geopolitical tensions, what usually happens is that a third neutral party comes in and mediates, like the Kofi Annan.
But then, there looks to be none.
But the guys who are supposed to come and bring in peace, they have their own interests.
We live in a very interesting, whereby even agencies like UN, which you would expect to do exactly what they should do in such a situation, are being closed, underfunded, and basically disrespected. Anyway, we will pray for peace.
Well, on the other side, gold. I have a very strong bullish case for gold.
Of course.
For 7 consecutive months, China has just been buying gold.
Yeah.
That is the Chinese Central Bank.
People's Republic Bank of China.
Yeah. The private sector in China, given what they went through with their real estate during COVID and after COVID, a lot of Chinese investors have moved into gold ETFs.
Okay.
So demand is just increasing month over month.
Okay.
So other central banks around the world are also buying gold, including Russia. So gold is still, I would say, a very promising asset. And given what's happening in the West, you look at the ECB, they are still cutting rates.
Yeah.
Yes. UK inapuliza kidogo. They cut, they
pause,
they cut again. The US is still projecting 2 more rate cuts in the year. So if you're investing in bonds, yields are no longer going up. They are most likely going downwards. So if you look at the ones that are increasing, like Japan, yields are going up, but they haven't even hit 0.5%. You look at Switzerland, safe haven asset, their bonds are at 0.3. That's the 10-year bond yield.
Yeah.
So a lot of these assets don't make sense over the long run compared to gold's long-term trajectory.
Yeah.
Given last year's performance over 30%, this year we are really doing well.
I mean, it's leading all assets.
Yeah.
I was even to mention that, like, I'm looking at the chart of NASDAQ and since, I think, early June,
Yeah.
At a high of 22,000,
Yeah.
it is down to around 21.5.
Yeah.
And today it has been strongly bearish, at least for that matter.
Yeah.
Do you think because people were saying they will save the bond markets
Yeah.
and tank the stock markets?
Yeah.
Is that what is happening?
Well, the bond markets are super critical for the US economy.
Yeah.
Because they impact the currency directly, which is something that the Fed and Treasury has a direct interest in
Yeah.
to make sure that their currency is stable. So far, I wouldn't say it's stable. If you see the dollar being down 8-9% to the Swiss franc,
Yes.
9% to the yen, I think it's about 10% to the euro since the year started.
Yes.
So with those like big shifts, like when your currency is down like 9% against a major economy,
Yeah.
that tends to impact business a lot. So let's say you're down 10%.
Especially if they are importing.
Yeah.
I mean, not only are you paying the price of the tariffs,
Yeah.
you're also paying the price of a weaker currency.
Exactly. Like you impose 10% on the EU, but also your currency loses by 10%. with the
Yeah.
EU. So your tariffs don't have as much.
9% plus 10% plus.
No, it's basically the other way around.
Yeah.
You impose a tariff of 10% on the EU,
Yes.
but then the EU can afford your currency
Yeah.
by 9%. So the tariff is not having as much desired
on
impact.
the Europeans.
Yes.
Yeah.
Yeah.
That's an interesting way to look at it.
Yeah.
Now my ways,
Yeah.
10% down on the FX differentials,
Yeah.
and then another 10 to 50%
Yeah.
on duties that you are paying on top of whatever price was there.
Yeah.
So you are paying a lot.
Yeah.
And therefore, you will have to mark down. If you are an importer of any product, you'll have to mark up the price of your product if you add value to it to other traders. So whatever they were paying, they'll just come and find, today I was buying a pen at $10. Now I'm paying maybe $15.
Yeah.
So you'll not do it instantly, but gradually. Once the pain start affecting your balance book, I think overall inflation will go back, because I think right now we are averaging 2.53 year to date.
Yes.
We might see it go back again to the 3s if things continue the way they are.
And that's why Powell is no longer cutting rates.
I don't think
holding the line.
Yeah, I think what he'll do, he will hold it.
Yeah.
I actually think the 1 or 2 cuts is being brave.
Well, he's doing the Paul Volcker walk. Like no matter what you guys, no matter how much you scream, I'm holding the line because I know if I cut rates
and things don't go well,
then it's gonna blow back on me.
Yeah. Staying on the rates, Kenya recently cut CBK cut rates, and I think there's been concern from the Monetary Policy Committee report. They were saying like the private credit is not picking up, and they would want a way to transmit it. And then there's a debate on because they use their own, I would say, they use the interbank rate to determine the in terms of risk-based lending, so that they can determine what works best. And I'm like, perhaps Kenya shilling should be doing much better in terms of to the dollar. We should be doing around maybe 120, 115 thereabout, to allow, if you are a local manufacturer and some good that you need to import, you do that and competitively sell it in Kenya. If you have to export it, you are not worried about spikes in your currency because it is stable at a rate.
Well,
what's your take on that?
I would say interest rates going down to 9.75%, below 10% for the first time in a while. That's very much welcome. But then, from what we are seeing, central bank is cutting rates, but the commercial banks are not cutting interest rates. So this is becoming quite a challenge. Yes, the central bank has been trying to push commercial banks to cut rates, but eventually they will have to, because what we are seeing in the bonds markets, about 2 years ago, we were seeing 18, 20% on
23% at some point. And
now we are seeing all these numbers going down.
Single digit.
I believe right now we are looking at what? 10%.
Yes.
Yeah. And of course, all these other financial markets products, from money market funds, fixed deposits, hotels, SACCOs, they have all lowered their yields. They are no longer giving 19, 20%. They have followed the central bank back to around 10%.
And as humans, people will start looking for higher yield somewhere.
Yes.
And
So when you de-incentivize people
Yes.
from just putting money in the government, whether directly or through these financial institutions, then they start looking at ways of putting this money in the economy. Because they tend to take much higher risks in order to get the same kind of return. So if you are used to 20% return from a bond with the government,
yes.
and now the government is no longer offering that, then you most likely would want or would be interested in putting this money somewhere where there is higher risk, but also to get a higher return.
Okay.
And this will explain why we are seeing a better performance of the NSE.
Okay.
Yeah.
Interesting. Tying that to what's happening globally.
Yeah.
Very few stocks are gaining attention. Even Nvidia, which you would say was the star of the show last year.
Yeah.
Everything is good about it. From the company numbers, products. They have a big deal with UK from I think it was Tech Week last week.
Yeah.
Almost $1 billion or something that the UK government has committed in building AI data centers.
Yeah.
But emerging markets are, creating a buzz. The Nasdaq is really bearish, perhaps due to the escalating tensions.
Yeah.
When you say you have a bull case on gold, if I were to look at it, personally, I think the Magnificent Seven is switching to another sector that will drive the stock market. So we might have maybe a small consolidation within the Nasdaq and even the S&P before another bullish run.
Well,
or am I oversimplifying it?
Well, there is some form of rotation. That is true. That is a fact.
Yeah.
So what we are seeing is, a few years ago, I would say the last 3-4 years, we have seen NVIDIA do what? Triple-digit returns year and over year.
Yes.
But then, when you think of traditional rotation, a lot of investors would move from riskier stocks in SP 500 or Nasdaq, and then go into the Dow Jones, which was considered to be a strong industrial index.
Yes.
But then investors have changed. They are really focused on company by company analysis. And analysis is much simpler, especially considering AI and the developments in financial engineering.
Yes.
So investors are no longer just moving from SP 500, Nasdaq to Dow Jones. They are looking at company by company. So the idea of Dow Jones was the US economy at its core level, industrials, things that are not going to fail in the near future, right? So
that provide basically what they provide, like let's say something like United Health.
Yes.
You will always need medicine.
Yes.
Something like Procter & Gamble.
Yes.
You will always need a toothbrush. You will always need a cologne.
Yeah, Procter & Gamble.
Yes.
It was like the core
they make
of the
things
American...
that drive the economy.
Yes. So now you look at things and how things are running.
I mean, Salesforce is the biggest individual driver of Dow Jones right now.
Yep. You're no longer going to make sales without Salesforce.
Right? But in the digital world, you will need it.
Yeah.
Remember when
you will need Salesforce no matter what you do.
Yeah.
American companies, they can't operate without it.
For those who are maybe not familiar with CRM, the equivalent would be something like the one, it's their competitor in Kenya now, Odoo.
I wouldn't even say Odoo.
Yeah.
I would say Lipa na M-Pesa.
Yes.
They are literally the point of sale front for companies.
Yes.
Yeah. So they are more like close to Lipa na M-Pesa or PayBill.
I think that's why when people tell me they don't know what Salesforce does, I understand where they're coming from.
Yeah.
But if you look at most business, even banking, for them to know, hey, Rufus has this account, this investment, they will need a CRM, customer relationship management.
Yeah.
And one of the best in the game, and I would say has been them so far, given the number of companies they serve.
Well, if you go to any American big merchant business, for them they pay using card.
Yes.
A majority, that's the top. So you just flash your card, you get something paid, but the software behind that is most likely a CRM software.
Yes.
So in Kenya, we mostly pay using M-Pesa.
Yeah.
So, but the software behind that is the PayBill and
they were very clever.
Yeah.
Their ticker symbol is CRM.
Yes.
And there are other companies which make CRMs.
Yes. But then look at this other thing. This company, Palantir.
Yeah.
Palantir is up hot, over 70% year to date.
Yes.
Main reason they are performing so well is because the US government itself, which is the biggest spender in the US economy, cannot function without Palantir software.
Yeah.
It's using Palantir software in immigration, in registration, in healthcare, in DOD, in police. it's almost like the government operating system.
Yeah.
And now they're getting more and more deals. So when investors are moving in that direction, you can see clearly that they are looking for safety. Like if you go for a company like J&J, United Healthcare, Coca-Cola, you're basically betting on safety.
Yeah.
So you're no longer willing to take more risk in
Not an investment advice.
of course, not investment advice. Like if you look at companies that have a high risk, but also they do well, like how in the first 3 months of this year, Supermicros are up over 100% before dropping, and now it's recovering again. So investors would go for that in the last 2 years because there was this hype, AI in earnings calls, and say the words. It has AI, it has Bitcoin. Like that used to be the thing. Right now we are seeing a very careful approach to investing.
The reason I'm asking that is because, previously we would wait for maybe earnings report, Tesla, and then we know what will happen to NASDAQ. We will wait for NVIDIA and we know what will happen. We will wait for Apple and we know what will happen. Google, what will happen. So what I'm thinking right now is happening. I think we had this chat almost 2 years ago, whereby once commercialization of AI and its impact to efficiency of the company is realized, those companies which do such well, not even the shovel sellers like Supermicro, AMD, or even NVIDIA, would match the potential of these companies' growth annually over the next 4 years. So I think right now, as you're right to say, we are looking at individual companies because we haven't found a few that you would say would drive, would contribute to, let's say, 20 or even 30% of the NASDAQ price movements. And I think by the end of this year, we will have a few companies which will be, if you know what they're doing, you expect this to happen to NASDAQ over the next maybe 1 year or so.
And then traditionally, we used to have these static baskets of stocks. If you're investing in tech, you go for the NASDAQ.
Exactly.
If you're investing in, let's say, smaller companies, you go for the Russell 2000.
Yes.
If you're investing, let's say, in
the entire economy.
The entire economy, SP 500 and so on. So right now, there's so much financial engineering that if investors realize that this group of stocks is the one that is doing well, they just pick them up, bundle them into one package, and then they sell to investors.
ETFs.
So those ETFs are just changing every day.
Okay.
So with the realization of what's happening, I'm sure you'll see some kind of engineering. You remember how we got, let's say during COVID, they engineered out of baskets around green energy.
Yes.
Because that's where Joe Biden was driving funds.
Yes.
So you'd see that there's a green energy ETF, and then people would push money there, and then they would benefit from carbon credits and everything.
Okay.
Yeah.
Interesting. I think NASDAQ, so your view is that the NASDAQ price that we are seeing, this bullish momentum, is not sustainable. Are we looking at maybe the price even going lower? Because I think that has been one call that people have made for the last few years.
Well, NASDAQ is still very close to its all-time high.
Yes.
I don't think it has dropped by much. It hasn't even hit 10%.
Yes.
So what we are seeing here is a period of uncertainty.
Okay.
We are almost expiring the 90 days that Trump had decided to freeze the tariffs.
Yes.
And now he's coming up with one big gag order where it will be more like, we have decided for you guys, it's 15%. Take it or leave it. So that's the next thing we're expecting, right?
Yes.
That's the next announcement. He'll come up with a cocktail of countries. He'll say for this, like let's say call these countries the rest of the world. So for the rest of the world, your tariff is 15% or 10% or whatever he decides.
Okay.
Then for a specific clique or group of countries that they consider to be their top business partners, or I would say strategic, then there will be a case-by-case negotiation. For instance, you can't ignore Mexico, which pushes out of cross-border trade, not just goods, but also personnel, workers, services, drugs, like all kinds of things happen across that border, same as Canada. So those countries are going to most likely have a unique deal country by country. And then you look at China. Like China is literally the biggest competitor to the US.
I think they did a very good announcement recently. I'm sure you saw it. They are looking to remove tariffs for any African goods. And I'm like, okay, that is 1 billion people to 1 billion people trading with each other. That's volumes.
Well,
that is cultural integration in en masse,
Yeah.
and if well placed and managed,
Yeah.
both of us can really benefit from this.
Think about it this way. In terms of global or international trade, Africa is one big, beautiful girl.
Yeah.
Every other continent wants to have good relations with Africa.
Yeah.
Why is this the case? On one side, Africa doesn't produce manufactured goods.
Yeah.
So, in terms of manufacturing, Africa has so much under capacity that all this capacity of manufacturing has been so underutilized, or I would say captured, because if it's oil,
Misappropriation of assets.
Yeah, like the
both personnel and finances.
yeah, the biggest companies running African infrastructure in oil,
Yes.
BP, Shell,
Total. Yeah.
you know, like European and American companies, mostly European, right? And now China is in the picture. It's taking some of these deals. So China has had a very good relationship with Africa over the last 20 years.
Yeah.
So with the we call it Road and what?
China Road
Bridge
and Bridges
Initiative.
company.
Yeah.
Yes.
So they have been building infrastructure, ranging from airports, roads, highways, and everything, and ports. And in all these deals, they have been providing financing similar to IMF and World Bank,
Yeah.
without conditions.
And the long term.
Yes. And then the overall effect is that if you go to every African home, 90% of the products they are consuming, they are basically Chinese products.
Yeah.
If you look at our streets, you don't see American cars. It's mostly Japanese, European.
But we know why.
Yeah.
Yeah.
So what I'm trying to say is, China has been benefiting so much by selling products in Africa, and now the US is realizing that, hey, we don't just have to do the Congo style where they destabilize a country, extract resources,
Yes.
and then that country remains like that, stagnant without ever growing.
Okay.
You can have these economies realizing good growth, developing,
Yes.
and having good relations,
Yeah.
where you do something for them and they do something for you. So Trump, in a bid to make America great again,
Yeah.
is trying to have good relations with Africa.
Is he really trying?
Yeah, he is. If he considers like removing trade restrictions,
Trump,
not just AGOA, like the whole of
if he
Africa.
considers.
Yeah, if he considers that, then that means that he's trying to get more market access to Africa. And that would mean that he gives us something in return.
Yeah.
So whether he will be constructing roads, I don't think he can replicate what China has done.
Yeah, there's this
because China has like all this infrastructure already.
Yeah.
I don't think he has extra workers, extra machinery that he can send to Africa to like construct roads. So he would have to consider something else. And maybe tech will be the thing. If he goes like in the line of data structures, we call them data centers.
Data centers, yeah.
Yeah. In that kind of tech sector, you would be able to expand in Africa.
Yeah.
Financial
or services and financials.
Yeah, financial infrastructure like banking, trading, democratizing, investing, loans. That would give them something to negotiate with.
I have another point just as we wrap up on that.
Yeah.
On maybe a strong case on why Africa is where it is.
Yeah.
If you look at these economies, you would say they have plateaued in terms of wage growth.
Yeah.
But here you are just getting, despite the inconsistency in growth, the middle class are maybe earning more.
Yeah.
They are becoming more tech savvy and more educated.
Yeah.
At least a good percentage of the population is getting well educated to university or even high school education.
Yeah.
And therefore this person can be able to do different types of jobs and even with a laptop and even with a mobile phone, content creators and everything, they're able to contribute positively to the economy.
Well,
and if they earn this amount of money and therefore we're able to maybe do trades with these economies, we can be able to afford what they sell. Quick example, or a simple example, Toyota was the best car back in the day. If you bought any other car other than Toyota, you would be considered wealthy. Right now, people are shipping in Mercedes-Benz like nobody's business. And they are willing to even ship in spare parts from Mercedes or wherever, such that the car in front of you is a German.
Audis, BMWs.
They're everywhere.
All over the country.
Exactly. That shows that not only are our infrastructure able to have developed to handle such cars, but also people are willing to pay the price of owning these machines.
Well, remember, after 2007 to 2008, the global financial crisis, we saw a lot of American companies moving away from America and doing their production in China, Asian countries, as well as India, right?
Yes.
So now the new development is, because Africa has a lot of youth and talent, and these guys are really good in tech. What we are basically seeing is companies like Facebook, Microsoft, Google laying undersea cables all around Africa to like build the capacity for internet, right?
Yes.
So as a result, the unexpected outcome was American and European companies now beginning to hire people from Africa, but remotely.
Yes.
So not an immigration problem, but a labor that is becoming more global.
Yes.
So here you find a graduate who, let's say, does computer science. They go online, they do an AWS course or a Microsoft course, Google course. And then all of a sudden they have a job online where they're getting, paid let's say $3,000 a month.
And that is puts you above 1% earners in Kenya. And if you increase the number of that from 10,000 to 100,000, that's huge. That is not one person earning money. That is multiple Volkswagens in Kenya.
That is a subsector in the economy now.
Exactly.
Right?
That person will hire more people to maybe clean his car, or even start his own company, or even build at home. So the trickle effect of that is unprecedented and definitely massive.
The way it started, I think it was during COVID, when companies like Microsoft and Google were looking for like coders, developers. On one time, they came to Kenya and swept across the tech sector.
From Safaricom.
Safaricom made a big screeching cry. Because a lot of developers that they were paying $1,000 were getting $5,000-$7,000 a month. Even $10,000 a month. And they were just moving to the US. So now it's happening discreetly, where companies like, I would say, Oracle, CRM, they're hiring these guys behind the scenes. Even customer care services. Guys are running customer care services.
From the comfort of their home.
From Wihoko. Like, you're having a US company, and their clients from Wihoko are real estate. Like, real estate agents. Like, they're hiring people, clerks and everything from Kenya. So all this is happening behind the scenes. So I believe America has a much larger interest with that kind of population because they know that these guys will not stay at the same level in the near future.
Interesting. I think this will be one of those geopolitical plays right at home. So something to watch out for. And obviously, as a traders themselves do that.
We are right into it.
To the tail end, without forgetting Bitcoin and crypto space. I think recently there was an act in the US whereby they would allow banks to hold stable coins and even issue treasuries in stable coins. My view is the US government wants to increase the debt limit, but they don't want to overload the dollar. So they are looking to offload it to something else. And whatever risks comes in from that will be limited in a silo. They are assuming it will be limited in that crypto silo. Another thing, I think Bitcoin volatility has reduced over the last few years. So that makes it quite good on it. We know... I know you are bullish to whichever level you will be. But do you think with central bank adopting this, and I think a lot of people have been asking, with the escalating tensions, Bitcoin is going down. But when things are cool, that's when it goes up. What is the correlation between the geopolitics and the Bitcoin price action in particular? And then this stable coin, do you think it will make it, I would say now, not just mainstream, but acceptable for banks and even yourself to tell your employer to pay you in cryptocurrency and you go to your bank and you're good?
Well, I would say the correlation is not between Bitcoin and stock markets. It's mostly between Bitcoin and global liquidity. So when, let's say when Kamal CBK chair hiked interest rates like real fast, we got to was it 13.5%? That made things really tough. Like banks tightened credit, or basically increased interest rates.
Yes.
They refused to lend to the private sector and lend more to the government. What ended up happening is that there was less money in the economy. So if you had a tracker showing you the number of Kenyans who are buying Bitcoin and other cryptocurrencies, that tracker would most likely show you a downtrend. Like there's less people buying Bitcoin. But then when you apply this globally and you say this is the curve of global liquidity, if the liquidity is increasing, then there is people who have and institutions who have more cash to buy Bitcoin.
Yeah.
So that has been the key relationship. But then when people have more cash and they are buying Bitcoin, they're also buying other stuff. They're buying clothes, they're buying food, they're buying gear, they're also buying stocks. So when you see, like let's say the Nasdaq making a strong rally, it's most likely because global liquidity has increased, and then you see that correlation being extended to Bitcoin.
Okay.
So it's not Nasdaq Bitcoin; it's more liquidity Bitcoin.
Okay.
Yeah. So from what we are seeing, the ETFs that started buying a lot of Bitcoin last year, they have just been buying more and more. We haven't seen these big banks reporting net sales in their Bitcoin holdings. So they're buying more and more. If you look at MicroStrategy and MicroStrategy, they're buying more and more. So adoption is just increasing. So the prices have stabilized because of, I would say, institutionalization of Bitcoin. In that, normally or traditionally, when we would buy Bitcoin, you would go to an exchange, buy Bitcoin, withdraw and put it in your wallet.
Yes. Or leave it in the exchange.
Most likely, people didn't trust exchanges.
Yeah.
The exchanges have a history in Bitcoin of collapsing and
Yes.
people losing their cash.
Yes.
So people didn't trust these institutions. But now with these regulations coming in, banks being allowed to like give investments exposure to Bitcoin, so you've realized that there has been a lot of financial engineering, which has allowed what we call rehypothecation. So rehypothecation basically means that banks and other financial institutions can basically sell more Bitcoin than they hold on their balances. So if you go and let's say buy Bitcoin on Binance or any other exchange or even Coinbase, it's only a number that is written there. Now you hold 5 Bitcoins, right?
Yeah.
But it doesn't mean that they have a chest and they have removed 5 Bitcoins from this chest and then put it in your wallet with them. No, they just give you a number.
Okay.
Right?
Uh-huh.
So when you make your withdrawal, that's when they will go to their chest,
And then give it to you.
remove the Bitcoin, and then give it to you, right? So since there's a lot of people who are buying and keeping the Bitcoin at the exchange, then the exchange is able to sell more than it holds.
So basically, they are doing the same way banks do in savings.
Yes.
You can see it, but it is not there.
Yeah, if you all decide to withdraw at the same time, there's not enough for everyone, right?
Definitely.
So it's the same thing. But then this absorbs sudden spikes of demand.
Okay.
So if all of a sudden there is a lot of demand and people are buying more and more Bitcoin, and these financial institutions can give you what? An ETF, a derivative of an ETF, a derivative of a derivative of an ETF. And then you can absorb so much demand
Yes.
without pushing prices higher.
Okay.
And that's why we are seeing this relative stability. Yeah.
Well, listeners, I hope we have not taken too much of your time, but address some of the key concerns from local, for Kenyans, of course, to global, and the correlation, how you fit in, what looks like it will be, especially from banking, oil markets dynamics, safe haven assets like CHF coming back, gold, price action, and of course, the current developments within the crypto and Bitcoin space. Hopefully it was insightful. I know I have learned today a lot. And of course, as usual, should you have any follow-up questions, kindly, we always say, share it. We'll answer it to the best of our ability or direct you to where you'll learn more. Maybe your closing remarks?
Well, I think we omitted something.
Yeah.
We have a growing audience, especially in Tanzania and Uganda.
Yeah.
Maybe it's time we start looking into the central bank, their currencies, as well as potential investments in the two countries.
Definitely. I mean, the spirit of East Africa, right?
Yes.
Yeah. We will definitely try to include an analysis on that front and, of course, cost implications to their personal wealth and whatnots.
If you've enjoyed the podcast so far, make sure to like and subscribe. Give us a review and share this podcast with fellow traders and investors. So if you've been trading with FX Pesa, make sure to check out the MetaTrader 5 trading platform. We have added new trading instruments, European equity indices, We have the Norway stock market index. We have the Swiss stock market index, as well as the Netherlands stock market index, all available on the single platform. And if you prefer using a mobile phone or a smartphone, then check out the Equity Trader app, which we basically use to access global markets. Thank you.
Adios.